Hello, my name is Chuck Youree. I'm a founder of Main Street Investors. Through my career, I've been in the business for over 30 years. And today I want to talk about one of the investment myths that we come up with, and that is stock picking. Does stock picking work? Well, when we talk about stock picking, that could be an individual buying their own stocks. It could be a broker or advisor telling them what stocks to buy. Or it could be a mutual fund manager buying the stocks in the funds that the investor owns. So can it be done over a long period of time successfully? No, it can't. Think about it. Think about, say, CNBC. You see the stock channel, and you have the people on there on the front desk, and one of them is Jim Cramer. Jim Cramer, he went to Harvard undergrad and Harvard Law School, so we know he's highly intelligent. So if he could pick stocks, like he says he can, but if he can pick stocks, he wouldn't be on TV. And he wouldn't tell you which ones to buy. He'd buy them himself, and he would be on an island worth a couple of $1 trillion. So think of it that way. It's predicting the future. What other industry does that? And that's the way that the business is run. So think of it another way. Do you remember the movie Back to the Future? Yes, Back to the Future with Michael J. Fox. Remember the big guy Biff? He had that sports almanac that had all the scores of the future. And that's what Michael J. Fox was trying to get back. Well, here it is. And what that would have said was, in 1972, the Miami Dolphins won 16 straight games. They were undefeated. Now, if we'd have known that, we'd have bet on that. That's knowing the future. And that's what you're saying with picking stocks. So it doesn't work. And so what's the solution? Well, it's real simple. First, we want to own stocks. Now, depending on where you are in life, in retirement, or wherever you're at, maybe not all 100% in stocks. So we're going to have some in bonds. That would be short-term bonds, and they were used to keep the volatility not so bad during the markets. So we would own the stocks, then we would diversify. And diversify, we're not talking about just in the United States. We're talking global diversification. And we're talking like 45 different countries. Now, a majority of it is in the U.S., but sometimes the U.S. is down and other places in the world, they're up. So year 2000, big example. So we diversify, and then we rebalance. What does rebalance mean? Well, think about if you were the client that had 60% in equities or stocks and 40% in short-term bonds. Now, if you had this is 2020, so the pandemic, if you would have had everything go down in March, if you had a 60-40 portfolio, that 60 went down. So you're going to buy with the bonds, you're going to buy low, and you're selling the bonds high, and you're rebalancing. And it's done automatically with the right platform. So you don't have to do it yourself. It's your coach that's going to do it, your investor coach. And doing those three things, you don't have to pick stocks. It's a losing game. Thank you.